Hey everyone, welcome. Good morning, good morning. Welcome to Tuesday morning, a fresh, beautiful day outside. It's cooled off quite a bit. Glad that you're here. If you're here for the first time, welcome. We're going to be having a good time here. We're going to be helping navigate you through the wild world of day trading futures. And it just seems crazy, doesn't it? It just seems crazy. But I'm really glad that you're here. So stick around, hit the like button, subscribe, ask a couple questions in the chat. We'll be sure to try to answer them for you. But let's go ahead and get started. If you're looking to take your trading to the next level, you can use the code DTJ and you can get anywhere from 30% off to currently 80% off your next evaluation account. If you have questions about that, put them in the chat. Happy to answer them. But that's the normal spiel that I give. Let's go ahead and open it in prayer, and then we will go ahead and get started. Okay? Father, we honor you this morning. We thank you, Father, for another day, another opportunity. Father, thank you that you are in control. Father, thank you that your faithfulness surpasses our mistakes. And Father, that we can lean on you and trust that you will come through. Father, we thank you that you've given us eyes and ears of understanding to read the markets. And we just declare that everything we set our hands to will prosper today. We declare that in the mighty name of Jesus. Amen. Amen, amen. Okay, folks, why don't we take a look and see what we got going on here. Before I do that, I want to upload this to my profile, and then we'll take a look at the market, see what we got going on. How's everybody doing? I saw somebody saying, we got people from all over the world. We got people from all over the world. I think that's awesome. We do have people from all over the world. I think that's amazing. I never thought that we would see people from all over the world. To be honest, I never thought about that. I think it's super cool. Okay. Sorry, I had to do a couple administrative things here. Let's go ahead and take a look at the market. Let's see what we got going on. And we'll do that. So we'll start with a daily time frame here. And let me shrink my face here. Give you guys a better view. From a daily perspective, we came all the way back up here. Isn't that interesting? And there is a small daily fair value gap that was created right here that I didn't really pay attention to. So there was the daily fair value gap. That was the daily right there. And overall, that's what we're sitting in right now. Let me get the correct daily. And as we dig into this and we get a little bit deeper, you'll see that we're sitting right inside that. Okay. But we've reached the daily fair value gap, came back up and tagged that right here. Could we go higher? I don't know. We're also at a daily fair order block. Here's the order block. So we have a fair value gap and an order block. You could count this as the order block. We're going to put that as the opening price. So we'll put that as a daily OB. Daily order block. Got to change that color. It's going to bother me. It's not the color it's supposed to be. All right. Make sure music's not too loud here. Okay. Dropping down to the 4-hour time frame. We have a 4-hour fair value gap here and a breaker all in this area. So we have a few things going on in this area, and it's where my interest is mostly right now. My narrative has been come up to this general area and then see us continue lower. I think I want to continue that same narrative, considering the 4-hour and the hourly price has swept these highs. We swept that high right here on the hourly and displaced lower. We had quite a candle around 8 o'clock, and we're continuing that drop lower. Ultimately, let's see if we can use London lows as a draw on liquidity. Other than that, we do have an hourly fair value gap sitting right here inside that overlaps with that London low. Where is my hourly? Busy right there. Okay. So you can see the overlapping hourly fair value gap. We've tagged it 1, 2, 3 times, and we have our London low right here. Outside of that, we do have another hourly fair value gap right here. That's really small, so we'll drop down to the 30 minutes, see if we got anything specific. We got liquidity down here. We got a 30-minute overlapping with the hourly, so nothing there. These are relatively equal lows here, so I really like London low. And then we have this 15-minute down here. So this is kind of where, after we run the London low, seeing it reach for this 15-minute would be nice if we're not extremely bearish. I want to see us run through these levels personally. Let's mark our opening range gap, and it's very small. Right now it's less than 10 points. Not interested in the 930 model. See how when we hit this daily we kind of just been going back and forth, the daily fair value gap here. Yesterday was a little frustrating, wasn't it? It was for me. We never saw really an expansion. Everything that I wanted. I took 3 losses yesterday. A little frustrating on it. I ended up taking a long on my personal account around 11:45, and was able to capture this move right here. That turned out to be nice, but I didn't do any. It was this move right here. I participated in that. I got in right around once we broke these highs, treated this as a breaker, low, high, lower, low, broke higher, and then took the long to these highs. And then we just did this straight sideways. It was extra, and I really wanted to see this. I didn't sell right away. I ended up selling once we were just going back and forth because I'm like, what the heck? Why are we doing all of this? It was, I was a little annoyed. So now that we are here today with a few minutes before market opens, a couple things that I like. We ran London high. We ran London high at 8 o'clock, sweeping the 7 a.m. highs, and then we displaced. This displacement says we're going lower. That's what this displacement tells me. So how can I get in to participate in a potential move like this? Okay. That's really where the question lies, and it's going to be in the form of order blocks coming up and being tagged and participating in that. I'm not going to take it at the open, so if the open runs this level, then we're going to miss that opportunity again. What's up, JJB? I have a company called JJB Ventures. I was looking at the ES shorts on Confluences with NQ, but didn't make it on time to catch it at the top, so I'm waiting. Yeah. And quite frankly, this reaction would have scared most people out. If it went that fast for me, I would have ended up selling right here. Simply because, or if I had the opportunity to sell, I don't even know if I'd have been able to. All right, here's the opening price. Let's mark 930 out right here. And then we have London high, we have London low. We have not marked midnight open. So let's mark midnight open. Oh my gosh. This is the kind of stuff that I'm just like, it's becoming annoying. All right, so we need to jump out to the 15-minute time frame. Where's our opportunity? Is it going to, if it continues lower, we talked about this 15-minute fair value gap. This right here, London low, will act as a breaker in the future. If we continue lower, because we have the high, low, higher high, and we just broke below that low, we'll see how it wants to close in the next 15 minutes. But we ultimately would want to see it do something like this. But stay out of this. There's the only way that I might take one micro is if we get a fair value gap type entry. I'm going to count that as my first presented fair value gap because of how large it was. So we'll see if this candle respects this and tags it. Way to go, BC. Yeah, yesterday was a little disappointing and a little frustrating for me. I ended up taking a win on my personal account, but I didn't touch my funded accounts again. So I ended up red yesterday. I'm watching for this fair value gap to be respected. I've talked about a pump and dump entry model. When it enters a fair value gap right off the open, it's about a 60% win rate. But I don't take it until the candle closes. Because if I were to take it right now, what if it closes above it? See what I mean? I don't like that we also ran London low. But we did run London high. So all right, so we're gonna take one contract here. We're gonna do from the entry right here is 26 handles, so we go 26, which is at the low. We'll see if it plays out here. And you can either let it sell there, or you can see if it wants to continue lower. I have a hunch, or I have a gut feeling of wanting to let it run to the 15-minute fair value gap right here. Where's my... All right, so there's my entry. Entry was actually right around here. Did we get... What am I? 28 handles. 25, 6, 7, 8. So we haven't hit the target yet. I don't like how we landed on the monthly opening price and respected it twice. ES ran the low. No, did we? No, we haven't. We have low potential low resistance liquidity here on ES. Well, we want to see it work out. We want to see the model work out, hopefully. This one, I only did only one micro for this. If it closes above it right here, got 930, we'll see if it respects that. But if we get an inversion of that one, we're probably running through these highs, so I may close it early. Just understanding the order flow. Yeah, so there's the... I'm going to close that trade. So I closed that trade. It went in our favor initially, but it never ran the low. It's the same issue that we had yesterday, is not seeing the continuation from some of these moves. It's been a little irritating on my end. So that was a 20-point loss, 1 micro, $44 down. One trade a day, I like it. All right, so watching this from a 15-minute perspective, we swept London low. We swept London high. We need to see something outside of this range here. Pathans, if you just do a quick search and you type in breaker or inversion and put my name Tyler or Day Trading Jesus, you'll see the models. There's 3 that I publicly teach. It's the breaker, it's the inversion, it's the 3 p.m. reversal. Those are the 3 predominant ones. How often do I put my stop loss at break even? On inversions, as soon as we sweep liquidity. In this case, when we came up into this level, the only way I was going to move my stop is if we ran this low right here. But we never did. So if moving my stop to break even, I feel would have been premature. In this case, it would have saved me. But as far as like, once this level is, once we get these 3 candles turn into an order block, this area here is now a protected high, and we shouldn't come back up to this level. If we do, I probably don't want to be in the trade anyway. So that's where I would have moved my stop to break even. But because we just came back down, we came down to it, this level here, and never swept this level, I left my stop at its original spot. We are trading the Nasdaq. Little breaker right here for a long. Low, high, lower, low. 930 finding support. See if it wants to expand, running this low resistance liquidity. We got relatively equal highs sitting right here and this 1 minute fair value gap. Equal highs were right here is what I'm referring to, and a 5 minute order block. Sweep of liquidity down here. The only reason I'm not taking it is because we swept liquidity up here and we swept liquidity down here. I don't know which direction it wants to go. I don't know if we are bullish or bearish at the moment. This candle would imply or signal some bullish momentum for sure. It's a large wick. It's potentially closing green. That's very attractive for a long. But here's an example of how those wicks don't always work out. Moving, aggressively run this level, leave a large wick, but then it continues in that direction. So from a hourly perspective, we're still in this retracement phase from this expansion retracing, and we're trying to see when are we rolling over. Are we in that phase of rolling over right now? We could go higher. There's an hourly fair value gap. I mean, price would support higher prices, the idea of higher prices, and still roll over. We do have a breaker right here that we ran into. So that breaker on the hourly was right here. I really like that. So I'm seeing different confluences that support different ideas. So the fact that we ran the high and the low, there's our push higher from that 930 price. We've already swept the hourly breaker. Sax, thank you. I appreciate it, my friend. It means a lot. I do want to take a moment and I want to talk about Bolonox. Bolonox is, you'll see it pop up on the screen. It's the B right here. Right now they're doing a 75% off sale, but they'll do anywhere from 83 to 90% off sales. But the specific thing that I want you to know is that they have two different types of eval accounts: a trailing drawdown and a fixed or a static drawdown. Their static drawdown is by far the most valuable because it does your stop loss or your drawdown limit doesn't move up as you go up in price. As you make $100, it doesn't go up $100. It stays at your $50,000 or $48,000. It's a great, but right now it's only 75% off. So when they do an 80, 90% off sale, I'll let you guys know. So, because I think from what I've been looking at, I think that's by far the cheapest and best option for that. It's very similar to Apex, but it's only worth it if you can get the static. If not, I would go with Apex because you can copy up to 20 accounts. So it just doesn't make sense to go another direction unless there's a statistical difference, and having a static drawdown limit is a statistical difference that I think is a bit in your favor in a big way. If you're wondering why I'm not taking this long, it's because I don't have an upside target. Sure, I could go after this, but we already ran London high here. I don't have a target unless we're really reaching for these levels up here. I could go out to the weekly time frame and see if we have where we're at from a weekly perspective. But from a weekly perspective, we're already above the midpoint of the weekly candle. Here's the low, there's the high. So I really don't have anything there. From a 4-hour perspective, we could potentially look at this 4-hour fair value gap. Sure, I'll mark that, but that I also have the hourly there already. So that hourly and the 4-hour overlap with each other. Look how we tagged London high right here. And we did an inversion immediately. I'm going to take one contract short. And see if this gives it to us. To this low. This could be considered a breaker right here for an upside move. Oh my gosh. My boys' phone was just going off. Like their cousins are excited. I got more cousins coming over here this week. And they're all excited, so I'm assuming they're texting them. Ultimately, I'm bearish. I want to see us to move lower, and I'm treating this all as manipulation, and would love to see lower prices. We got an inversion immediately. With some expansion, so that's why I took this short with one contract. Was willing to see if it goes in my favor. Here's a 15-second breaker right here. This is where I'd want it to turn. If it can't turn, I might close the position. I'm just going to move this down here for now. Closing that position. We got 5 minutes till 10 o'clock. After that, we'll do our daily affirmation. Let's hit 75 likes to do our daily affirmation, folks. It's one of my favorite points in time to do those daily affirmations to make sure our mindset's right. We're reset and everything. I need to. I'm noticing that in the market that I'm dealing with, that my expansion entries are not the best. We need to get in on the retracement. This level here would have been better to get in there, but it wouldn't have been any of my models, so there would been no position for me to get in. But I see a lot of just back and forth. So right here would be our next entry if we are bearish. We would look to see it run to this level here. I like this idea, but the concern I have is from everything that I've done, except for actually this entry right here, we expanded to the high right away. So look at this inversion of the first presented fair value gap. When we closed above it, we expanded right away to it. That's a good sign. I like this, but we got to watch for 930, the opening price for 930. This hourly candle communicates lower prices. This hourly candle ran that low and then closed back up here. So am I bullish or bearish? I'm not 100% sure yet. So I'm just going to sit. I'm going to sit. I see an idea of us going higher, but from an even higher perspective, we're at a breaker right here for a retracement or for a move back to the downside. I prefer a downside move. We've had all of this. I don't know if I do any economic data at the top of the hour, which is in 27 seconds. Let's see if it gives away where it wants to go. ES never ran as London high, by the way. Heck of a candle right there. What a gap. I'm looking at the micros account. There's a massive gap. So, all right, so green candle on the hourly. On the 4-hour candle, we closed green and swept the high, but inside the range ultimately. So the 4-hour here, sweeping that high, could signal a reversal right here. But we've been just for the last 16 hours, we've been kind of back and forth. Not the best place to be in. Kevin, I'm so glad I closed my long. It's always good to wait till after news. Sitting here waiting, folks, waiting for something clear. We're in the middle of the London highs and London lows, and we've tagged both of them, so it's kind of ranging back and forth. I kind of want to wait till I know what direction we're going. I took 2 scalps that, well, I took one and it didn't go in our favor. I took another one and I just wasn't wanting to expand my stop. It ended up moving in my direction. Just these stop losses are a lot larger, so don't get it. What my takeaway right now is, don't get it on the expansion. Wait for a retracement and get a better overall position, and then set your stop at an appropriate high or fair value gap, and then let the trade play out. So in this case, we have this inversion right here that's also overlapping with this fair value gap. Taking a trade that comes up into both of these and respects it and rolls over, that would be of interest. Because we've gotten a displacing candle showing that we want to move lower. We got a displacing candle here, a displacing candle here, a displacing candle here. All these tell me we want to move lower. It's just trying to time the correct time. $75 likes, folks, and we'll do our daily affirmation. Almost there. Almost there. I hope you guys appreciate the daily affirmations. There's a close below the first presented fair value gap. If you were to take an entry right here, the problem is you got a large fair value gap up to this high that we would have to respect, which it's not, it's only 15 handles. You do have an order block right here. Are we going to range back and forth here? Breaker right here, 930. Good. I'm glad you guys like the affirmations. A lot of time goes into them. There's an inversion right here, but what did we not do? We didn't sweep a low. So it doesn't draw my attention to this long here. Okay, we've been running back and forth through this daily fair value gap so many times that I think I'm just going to remove it for right now. It's just distracting for me. If we can get back up into these levels right here, I will look at taking a short. I think that's the only area I want to take a short in. We've been going back and forth that I don't want to go short on an expansion. I'd rather get short on the retracement, or what I would believe is the retracement, and see if we can move lower from there. The market is winning. Oh, that's funny. Where's my 4-hour interest levels? I feel like I need to pay attention to my 4 hours. We've tagged 4-hour down here. We've respected the 4-hour or the 1 hour 1, 2, 3, 4 times. We have a daily order block, the bodies of the candles. I think it's more important to sit and wait here, folks. Unclog. That's I know it feels great. Just don't let that become something you do on a consistent basis. Patience is the most important thing, just like John says. Unfortunately, it's not the most exciting thing on a live stream. It can be very boring when you're on a live stream. Tell some jokes. All the jokes that I know are already been. They were told what, last Friday, 2 Fridays ago. You bet, John. Way to go. Did I ever tell you about my older sister? What was that you said? How old is she? Why she is so old she can remember when the blast? See, wasn't even sick. I'm sorry, John, I don't get it. Should read, she is so old she can remember when the Dead Sea wasn't even sick. If you ever wanted to get some jokes, just type it into ChatGPT. He'll hook you up. Lyrics. Can you imagine be hit with a tomato? You know, they would throw things at people that they didn't like, so they'd throw. Imagine throw a tomato. Getting smacked in the face with a juicy tomato. Seven more likes, folks. 7 more and we'll do our daily affirmation. Right now, what I want to see happen is price come up to here and then move lower. Why here? It's the only untouched fair value gap. Everything else here has been grabbed. We grabbed here. We swept liquidity here. If we don't want to go higher, I want to grab this and then move lower. There we go. I asked ChatGPT who is feared the most. I had a couple questions before that led up to that, but it answered Jesus, good or bad thing. Feared it depends on your definition of feared. All right, so we're continuing lower here. We're outside of the macro period. It's just this back and forth. We're going to sit. We're going to sit. All right, let's do our affirmation here. Today's affirmation is based on Colossians 3:23. I don't perform for praise or fear criticism. I trade, I work, I live for one. His approval is enough. His presence is my reward. Everything I do is worship. I've been thinking about this idea of reaching the pinnacle of success, putting in the hard work to actually achieve success. And I listen to these books, I read of these people, I watch videos of these people who have achieved greatness. And it's in front of the eye of many to get their accolades. And it was in one of those moments I just felt in my heart, and I just said out of nowhere that I do this for an audience of one. So my question to you is, are you doing everything as unto the Lord? Is he your audience? Is he the reason why you are doing what you're doing? Can you find your identity in his affirmation? His approval is enough. His presence is my reward. I mean, I feel that when I even say it. I do not perform for praise, specifically from other people, or fear criticism. I trade, I work, I live for the audience of one. Yes and amen. Realign, just what it does is he has the affirmations realign. So even as we're trading here, it kind of just, it can pull you out of that place of, I'm looking for the trade. I'm looking for the trade. Is this it? Is this it? Is this it? And kind of, it helps reset where you're at. Amen. All right, 5-minute perspective here. Again, more displacement. Now we're hitting this 15-minute fair value gap, also a 5-minute fair value gap. Let's see how it reacts here. We got 7 minutes left on the candle. Again, I'm going to look at London low being a potential area of interest. If we can't get back up here where I originally had that and we continue to expand, I'd look at this as being a breaker. See this candle right here in the wick? Want to treat this wick as like a fair value gap. So when we come into this wick, we're coming into a fair value gap. So we could find resistance in this area, and then we can use that as a point of interest to go short. Maybe it wicks up into this fair value gap right here, and then we can go short. But if it keeps melting, I'm not going to have an opportunity here. We'll get something. It's just a matter of being patient. It's just patience. It's just waiting. Yeah, I'm still in. I'm still in for the bearish bias. The question that so we have the first answer to our three-part question. Question number one is, what is our bias? Overall, I'd say my bias is to the downside. So that goes to our second question, is narrative. How is it going to get there? How is it planning on getting there? And that's by far the hardest part of the question, is because you got to be able to understand order flow and market structure and be able to read it in a way that can aid you in taking a trade. And then number three is, do you see your model to take that trade? So in this case, I still want to see price come back up. It may not reach all the way up here. So I'm watching this first presented fair value gap, which is overlapping with this breaker here. Low, high, lower, low, or high, low, higher, high. Then we move lower, come back up into this breaker, which is also, there's an inversion right here overlapping with this first presented fair value gap. We have this giant wick right here that that balances all of this price action, so we really don't need to go much higher than that. So grabbing this liquidity here and then rolling over, that's attractive. I just don't want it to run now. Look how we've respected the order blocks. Yeah. What I'm looking for is, if we can't get that retracement and we continue to see respect these order blocks, if price comes back up to an order block, we can potentially participate in that. Just got to be careful. This is regular trading hours. Oh my, I wish I kind of paid attention to this before. The regular trading hours looks really good for a sell model here. going to look at this 930 candle right here and see if we can get in right here. Hindsight, yes, but we still might have an opportunity to participate in this. Look how smooth all this is. There's an inversion right here. Still sitting here, still waiting. I wasn't going to take a trade here because it was 10:30. I don't like taking trades around 10:30 or entering 10:30. I don't think we're going to rip back up. I mean, I think we could rip back up to this general area right here. That's the narrative I want to see. And if they can give that narrative to me somewhere in here, I'll look at taking a trade to the downside. From this high to this low midpoint, look where midpoint is, right around that area. So this is the area that I really want. If we get too much lower, then we're looking at this as a breaker. Well, I'm getting the feeling that we missed the move, folks. 10 o'clock was right here. Had our manipulation, had our expansion lower, and then the continuation here. We initially got in right here to take that. I liked how we reacted. I just didn't have a large enough or allow for a large enough stop loss to then begin to move in my favor. So at this point, I think I would have to acknowledge that I think we missed the move for right now. There's a good chance around 11 o'clock we could consolidate for another hour, especially since we had an expansion move during the 10 a.m. hour. So we could potentially get a reaction trade. We could get 10, 20 handles probably on something like this. If we get an inversion right here, if we get an inversion, I probably would take this trade because we swept the low, we hit a weekly fair value gap, we have an inversion right here, and our first swing high is right there. I could see that happening. To just play a retracement of 10, 20 handles. I'm going to say no entry on that because we have a fair value or a volume imbalance right there. I would be looking for a long around this play around here. We've had quite the expansion here. And I don't want to be the contrarian either on this whole thing. Here's the first presented fair value gap for the week. Oh yeah, it didn't even give us that opportunity, so there is no trade. We're about to hit an hourly fair value gap on ES. We are in that right now, actually. For psychology talk, I would say these are the hardest moments. Is when you feel like you missed the trade and you want to make up for it. Or for me, not only did I miss the trade, but my analysis wasn't correct for you guys. That's tough. That's tough. And so being able to handle that and still maintain patience is definitely a skill set that takes time to acquire. If I was trading with higher contracts, if I was trading with 5 micros, because right now I'm trading with 2 for the time being, is if I was trading with 5, I probably would have been willing to take 1 micro and got in for an entry at a order block to see if it would continue, so I could participate in the move that we're seeing. In this case, when I'm only trading 1 or 2, I really don't want to do that because my max position size is not large enough to put me in a position to exit the trade or add to the position. So it's something I just have to deal with, especially knowing that I'm on a live stream. I want to perform for you guys too. I want to do a good job, right? But my affirmation today was what? I do this for an audience of one. So really taking that to heart and doing this unto the Lord, not necessarily for you guys. I want to do a good job. I want what you guys are watching it to be enjoyable. But it can't be a motivating factor in the decisions I make. That's where my mistakes are made. We have this opening range gap right here. I'm going to go back to regular trading or electronic trading hours. We have this opening range gap that has not been filled at all. Down here. And then we have a 930 price. That was from a few days ago. That's right, vintage trader. Missed some, caught some. There's always something else out there. Okay, so new interest level that I have is going to be this opening range gap. We have 930 and previous day midpoint. This is going to be where I think we could end up going based on this displacement. But now that we're in the first presented fair value gap, I'm still interested in a retracement. I need some type of movement this way that I can participate in the move this way. Unfortunately, when we look at an hourly perspective right here, we're going to need another hour to print to give us this candle, and then potentially another hour to wick inside of the fair value gap that would create right here for me to want to continue lower. So from an hourly perspective, that could be 2 hours from now. From a 30-minute perspective, same idea. We'd need another candle to print and then take that trade right there. See how aggressive we got on the last period right here? If we close below this, we're inside this first presented fair value gap, so it makes it less attractive. So I'm not going to be interested in that. There's our close above the inversion. I'm not going to take this one. What I want to see is something like this. A failure swing lower where we don't make a lower low, or just a small sweep. Then we get the expansion or larger retracement. Timothy, is it why or where? You could do 50% of the price leg that you see here. This red line. All right, if we close above this, I might do one position. If we don't, no entry. I was going to treat this as a failure swing lower and close above, creating an order block, but now we're just waiting to see how far it wants to go down. We tapped the midpoint of the hourly fair value gap here. See that?
Order submitted.
I'm going to take one contract right here. Using this down close candle here and the break above it as our order block. So I want to see that hold. If we can't hold it, then I'm wrong on the expansion higher and I'm going to have to be done for today. Because I haven't been wrong on the other trades. Just my position wasn't the best. Yep, I'm gonna get stopped out here, folks. I can give it a little more room for that fair value gap, but I'm not too excited about it.
Order submitted.
I'm gonna add to that position. I'm going to take one contract off there. Set my stop at break even. We just hit the previous month's midpoint right there on that candle. I might close it. This trade will put me green for the day. If we get another push higher, I'll look at selling somewhere up at the top. I wouldn't mind it reaching for that order block. Right around there. I don't like 2 tags of that level. Let's see if we can keep going here.
Order canceled.
I'm going to sell right there. All right, that was a 40-point win. That put me positive on my accounts. Not huge, but there. Oh, well, I'm glad I sold. I don't want it to come all the way back down there. No, I think we still go higher. We're in. I mean, we could. Chris, 5 days a week. 9:15 New York Standard Time. I think that's I don't think this is a move lower. I think this is manipulation. I could be wrong. It seems I've been wrong frequently as of late, so take a conservative approach until I start reading the market correctly. You have those moments where it's like you're reading it right, then you're reading it wrong, and you just gotta be extremely present with yourself so you know when you are and when you aren't, so you can adjust. Yeah, it looks like it wants to continue back up there. Getting through those types of drawdowns are very, very difficult, or let me rephrase that. When it runs against you like that, it's very difficult to hold through those, for sure. It definitely takes time, patience, and experience to be able to do that. Get long on the retest. If I do, I'll probably do it on a personal account. Maybe on a retest there. But I have a feel, I think we do more consolidation than we do expansion. I mean, I would probably bet going short right here and selling in the middle of this price leg right here. So selling right there. Timing and understanding like when price is consolidating and when price is changing, when it's what's the word I'm looking for? So that there's that trade right there. So that whole idea would have worked out. But phases, that's what I'm talking about. Understanding the different phases in price can be very valuable. So this is a phase. What did I just do? So this is a phase of price right here, right? Expansion. This is considered a phase of price retracement. So after retracement, it either turns into a reversal, a further expansion, or a consolidation. Price rarely goes from expansion, retracement, expansion, retracement, expansion, retracement. It does it on a higher time frame, but on lower time frames, you see more expansion, retracement, consolidation, expansion, retracement, consolidation. So you get more price action like that. So my concern is, or being able to understand and figure out what phase of price we're currently transitioning to allows you to consider taking turtle soups like this. I'm not saying it's easy. It's one of the hardest things to master is understanding when price is changing, phases in price. In general, time is a huge factor of it. So when we made this low, we were in the 11 a.m. macro. We made our low and now we are outside of that macro time. And my assumption is we're going to consolidate in this range somewhere. So playing sweeps of liquidity instead of runs on liquidity is probably more valuable. So if we push higher here, that's fine. I would probably be looking for it to come back into the range. John B. It was a good one. It was a good one. But if I had to guess, we'll probably do something like this up to this level here. So I think what I would be interested in is a fake run this way, sweeping liquidity, and then playing an inversion to the upside. So let's go back and let's evaluate price and see if we can learn from anything here. Because the worst thing is missing moves like this. And that's exactly what I did. I missed this. So how can I improve? What signatures in price did we not consider? What signatures in price did we overlook? And how can we get better on that? Okay, so we have this low resistance liquidity. We have a manipulation leg. We had this move higher, right? We tagged the London high to the tick and aggressively moved this direction. That signaled to me lower prices. So I ended up taking a trade right here, but got stopped out on this retracement. So lessons to learn: if I'm gonna take this impulse move, it's not invalid unless we run this high. So I should have had a better stop loss placement, and accept the risk. Either I accept the risk or I don't. Okay, that's option one. Get it on the expansion, set a proper stop loss. So I got in somewhere around there. Set your stop loss there and target at, whatever you want, right? Or that's option one. Option two, if I'm going to take this impulse leg, wait for a retracement up into a fair value gap of sorts. So let's just say it's here into that fair value gap. We'll keep your stop loss at the high, and now it's only a 18 handle stop loss. So you have a better risk to reward. That's option one that we could have looked at, okay? So what else do we got? We saw expansion. We came through 930. We came through the first presented fair value gap. Honestly, I should have looked more closely at the 930 or the 930 opening price. This is such a big candle that I shouldn't have ignored it, especially it being 930. That when we went lower into this inversion fair value, or through that first presented fair value gap, when we come back up to it, we tagged it once, we tagged it a second time, and we tagged to the tick previous day high. This is what I'm noticing, folks. Look at this level right there, and look at that level right there. Both of those tapped to a high degree of accuracy, a key level we like to watch. And I need to get better at when we see things like this, and then we see candles moving in the other direction, that I need to be okay with taking that risk, because I see this happen a lot. It's hard to go back and test it, because back testing key levels in these things, it's very hard to do. So it's only by spending time in front of the charts that you start seeing some of these things. So that's something else that I probably could have spent or been more aware of as we watched price move. The second thing is, not only did it tap the previous day high, we closed below 930 price. So we referenced 930, went away, came, wicked, tapped the previous day high, closed below, and then we sold off, creating an order block right here. We also have this breaker, high, low, higher high. We broke below it, came back up into that level there. I really wanted this, because for me it was my conservative entry. It didn't give me that. Okay? So I have two options. One, accept that it didn't give me that and miss the move. Or two, look at price repricing lower and find a new opportunity. Recognizing that we're seeing all the indications of price moving lower. Breaker, 930, London high, previous day high tap. So then when we come back down here, we can use this as an order block entry with a fair value gap tag right here below the previous or the first presented fair value gap. We could even allowed it to come up into here. Obviously it didn't. But all of these could have been opportunities for me to, again, I could have took that right there. And if I wanted, I could have placed my stop up here. That would have been a 35 handle loss or stop loss. Honestly, that would have been the only place I could have put it. If I was to take this trade, the proper place for a stop loss would be this high right here. That's a large stop loss. That makes it a big pill to swallow. Same concept with here. If we take this order block entry right here, our stop would still be this high. That's a 31 handle stop loss. Maybe if it closes back above the first presented fair value gap, so 20 handles, 20 to 30 handles. So what is this telling me? That if I have all the confluences, order block here, all the things that we've talked about in fair value, first presented fair value gap, and I get an opportunity, I need to reduce my size, and I probably should accept a larger stop loss because all of the opportunities that I would have wanted to take required a large stop loss. Here, here, here. This one could have been a little smaller. This one could have been 24 handles, using that as an order block at that swing high. Here, how to put it there, 31 handles. Or you get it on one of these retracements with better risk management, there's 15 handles. So if you didn't get it anywhere in these, what we could have done is saying, all right, we see price respecting these order blocks. Here's price coming back up into that order block. Price displaces lower, comes back up into that order block, displaces lower. And we could have taken one of these entries and got a smaller stop loss. So out of all of the opportunities here, this one here, while it's not the best entry strategy that I use, it has the smallest risk. So we could have done that. If we would have done something like this on that one there, if we got in here, our stop would have had to been at this swing high right here. So 21 handles. Do you see what I'm saying? So I guess there's opportunities for us. We would have just had to accept the risk that we could have gotten a loss, and we would have needed to put our stop at the appropriate high to protect our position. Because, I mean, despite what anybody wants to say, if they say they get in here for the breaker, the proper stop loss is up here. Maybe, like I said, maybe this inversion, 25 handles. And many of the times I don't take these trades is because I don't want such a large stop loss. But then I'll end up taking a trade and then my stop loss is still already the same. So this trade right here, we went long here. My stop loss, it was right around here. There it is. I had a 34 handle stop loss on this trade. I had a 34 handle stop loss on that trade. So my question is, why couldn't I have done that up here? if I was willing to put a 34 handle stop loss on a trade that's going against the trend is obviously lower. Why couldn't I acknowledge the trend in this direction? We did that. We acknowledged the trend in this direction here. We were concerned about the 15-minute fair value gap, that it was going to bounce. It didn't. It ran through it. But even before the 15-minute, I could have looked at this order block right here, got in on that retracement, and got in right there. And my risk to reward would have been significantly better than the trade that I actually took. So even though we're green on the day, I'm going to rate my performance as a 4. I don't think I performed very well. I feel like I could have logically made better decisions and better risk opportunities. Considering this trade here, I still did a 30 handle stop loss. Man, if I was willing to take a 30 handle stop loss here, I should have been willing to take it here. I should have been willing to take it here on this trade that we took right here. I went short. We went short right here. That was a 27 handle stop loss. Yet I didn't have it at that. I closed the position here. So if I'm going to criticize my trading, the area that I need to see improvement in is in taking a trade and setting my risk parameters correctly and being willing to take a larger risk parameter. If this is what it's going to give me and this is what it is, then I need to be willing to take it. This trade right here emotionally threw me off. Not because I was wrong, but because I didn't manage my stop loss correctly. I should have simply just put it here. I ended up closing the position because we inversed this candle. We inversed that fair value gap right there. Because what happens when we have an inversion? I expect price to run the high, so I was just protecting myself. But I should have just left it here, because if we in fact were bearish, which we were, it's gonna leave this high intact, and it did. So my trade idea wasn't incorrect. The impulse wasn't incorrect. My gut wasn't incorrect. It was the management of that position that was incorrect. And because I took a loss there, it affected the rest of these opportunities on the way down. All of that. I almost didn't even look. I was just like, you know what? I'm going to sit and be patient. I'm going to sit and be patient. I'm going to sit and be patient. All the while, it's giving me phenomenal entry opportunities. I'm going to sit and be patient. I'm going to sit and be patient. When the truth is, it was this loss that messed with my psychology on the rest of those opportunities. So there's our analysis of today's price action. Where we're at right now, I think we're in consolidation. If we violate this inversion fair value gap, maybe we expand lower. Remember, there is a first presented fair value gap for the week sitting right here. I do like all of this. That's looking pretty good. I don't like the time though. Let's see if we close below it. All right, we closed below it. That's hard to ignore that aggressive candle here. I'm not in anything. I'm not in anything. Yeah, I'll trade PM session. I think I might try a little expansion move right here. See if it wants to run lower. $9.30 price is down here. We got a breaker here. We had large displacement here. I don't know. I like the idea of it continuing. It said it gave us a clear indication of where it wants to go. We closed below it. Did we get a 5-minute close? The 5-minute hasn't closed below it yet. All these areas right here look good. But either way, folks, I think I'm going to call it a day here on the live stream. Thanks for hanging out with me. We'll be back here tomorrow. Same place, same time. So God bless. Use the code DTJ if you're interested in checking out any of those prop firms. And then down in the description, if you're interested in joining the Purpose Driven Trader Academy, you can find that down in the description. So God bless, guys. Stay safe. We'll see you all tomorrow. Bye-bye.